All right, so welcome to Game Plan Sunday, everybody. It is Sunday, February 10. We're actually going to, do our thing as we do every week. Game Plan Sundays. You guys asked for it. That's why I deliver it, and it's extremely valuable. You probably never find anything else like what we do and how we do it nowhere else, especially without a fee. But we're definitely letting you guys get exposure to, how we actually do this thing as far as generating income in the stock market world. So we actually take a macro look, big bird eye view over the markets. We'll take a look at what happened over the past week. What did we learn from that? What events do we know about that's coming in the near future? How can we leverage that information to make executive trading decisions so that we can generate some income? So that's what it's all about here at Wall Street Jackboard. So anyway, if you guys haven't subscribed, make sure you subscribe. Make sure you share, hit the button, hit the like button, share, tell a couple friends, bring everybody over, okay? Anyhow, so last week was pretty interesting, pretty choppy week, and but we had some nice bullish. We had nice bullish front end of the week, but the end of the week, things got smacked up. Okay, and that's pretty much the overall story of what happened last week. So anyhow, something that was interesting that caught my eye, if you guys noticed my rants on Facebook, was this setup in it wasn't even a setup, it was just a play that was in EA. So you guys my screen here, EA, Electronic Arts, they make video games. Anyhow, they've actually been doing pretty bad from the Battlefield release and everything, and then their Anthem release was doing pretty bad. But while the market was in calamity, this popped up on the radar. And so here I am trying to figure out why why is EA popping up like this, right? It was crazy. So anyway, trying to figure out why was EA popping up like this. And come to find out, it's a new game that they released just out of nowhere. And it's called, what is it called? Apex something. I can't remember. I just got finished playing the game. It's called Apex something. Anyway, somebody help me out. Me or somebody. Y'all know what the game is. It's Apex Legends. That's what it is. Apex Legends. Anyway, so if you guys have kids, then you know the most popular game in the world right now over the past, quarter has been Fortnite. Fortnite has been killing the markets, making crazy money. But EA, they decided to drop this game out of nowhere called Apex Legends. And this game actually, I think they had like 10 million downloads or something like that in like the first day, like first couple of hours actually. So anyway, with that type of traction they receive, we caught like all this movement in the markets. And so anyhow, I had to go figure out what was all the fuss about. So that's what I've been busy doing, downloading the game. And I actually just got through playing the game a few minutes ago, and it was actually pretty cool. So, some of you guys, if you have kids, they probably already playing the game. You should like curse them out and tell them why they didn't tell you about this new game that was dropped, because you could have actually got in on this move, this move here from EA. So this is a good thing. They're actually saying that it's better than Fortnite, which is, a great thing for this company. So that was like, I guess that was the highlight of Friday. Meanwhile, the market was in, the bucket hole. So, and the game is free. I have EA access, I paid for that too. So I don't know if the game is free for everybody or it's just for EA members. If I were you, I'll just go to whatever your gaming lobby is and then see if you can actually download it for free. Anyway, game is pretty cool. But anyway, if you was wondering, like, what is all of that about, right? It was like 14% move in one day. That's like substantial. Some of you don't even get that in your portfolios and your 401k. So yeah, this is a big deal. Okay. Anyway, we'll keep our eyes on that development. Overall, for the markets, what we had last week, we had Trump's State of the Union speech, which was I thought was pretty interesting. I don't know. Did you guys watch the State of the Union speech? Any of you guys watch the State of the Union speech? Some of you probably didn't have time watching it. I don't know. Maybe there's other things going on. Okay. Well, every Game Plan Sunday, we always talk about, the state of the economy and things like that. So pretty much if you watch the Game Plan Sundays, then you pretty much already know the state of the economy. And as you guys know, Trump is definitely going to use that for his bragging rights. And it was, pretty much talking about the strength of the U.S. economy, which, I've been telling you guys about. The theme here has been global economic slowdown. So you guys know the last article that I put out for you guys was talking about the world slowing down. And that's actually pretty true. Okay. We have, I believe, Italy is already in a recession. Okay. And so you have Germany. All these European countries, they're actually, facing a lot of turmoil. A lot of stuff is coming off the back of China. So China is going through slowdown too. Now, it's weighing in on the entire economy, okay? The world economy. However, the U.S. the U.S., if you live in the U.S., then you're just basically at the cream of the crop because the world economy is slowing down, but the U.S. is actually still able to maneuver. So meanwhile, you got the world down here, but the U.S. is like up here at the top. Now that actually puts the U.S. at this leveraging point where basically, if you understand leverage, if you have an advantage, you can use that to negotiate certain things. And so the key issue here is trade with China, trade tension with China. You probably see it all over the news, hearing about it. It is very important. There's a deadline coming up March 1st. So we're in February now. It's February 10 today. March 1st is coming around the corner. It's next month. And basically, Trump was supposed to have, a preliminary meeting with Z, but I guess he called it off. And so the sell-off that we saw at the end of the week, it came from that. I guess Wall Street wanted to see them have a meeting ahead of time, but he decided to cancel. I'm not too sure what reasons. Maybe you guys know and could talk about it. However, we just know what happened. Stock market wasn't, too thrilled about that because the markets want to see development move forward with this trade deal. If it doesn't, then there's going to be like an extra, I think it's like 25% tax that's going to go on Chinese goods, which that's substantial. It's substantial. It's like, I think it's like 10% now, but to raise it up to like 25% is substantial. And so, it's going to be companies who have a lot of exposure in China, meaning that you get all your goods and everything manufactured over there. It's going to negatively impact you in a major way. So imagine if you pay 10% taxes and then next year you got to pay 25%. You'd probably be upset. So that's kind of what's happening. So anyway, we're talking about the leverage thing. So basically, the U.S. has the upper hand in this whole trade deal, tension stuff. And Trump is more than likely going to muscle his way through this situation to get this trade deal going with China. China pretty much, their economy really just can't take it. They're going to have to buckle some way. Okay. That's just, from the research we've been looking at and doing. So that's pretty much what it's going to be. So because we know that that's what's happening, that's to kind of give you guys insight on what occurred at the end of the week. So that deal, they didn't do the preliminary meeting, but they're still on for the March 1st thing. So also this week coming up, we have Friday. Friday is going to be important. It's more political tension. You have the Democrats and the Republicans, and the House, of course, controls the Democrats controlling the House, and then you got Republicans in the Senate. And you got Donald Trump who wants his wall. So anyway, this Friday, it's got to be a deal, or it's going to be another shutdown. So you remember, you guys, we had a government shutdown, like the longest ever. Anyway, we had a relief, 3 weeks. I know time is flying. That time is expired now, coming up this week. So they have to actually make a deal. And if they do not make a deal, then the markets is probably going to puke again. And so that's still looming above our heads. So we know that that's what's coming up, this coming week. So we got to keep that in mind, that it's a lot. We still have this political tension. Earnings, we're still in earnings season. As you guys know, the Super Bowl passed last week. The prior week, Super Bowl is over, but Super Bowl for the markets is pretty much over also. So earnings season is like the Super Bowl for the markets. We get them 4 times a year, right? And so the big dogs pretty much already did their reports for the beginning of the year, led by the financials. So this rally that we see off those December lows, we got the greatest January since like the 80s. And basically that was led by the financials, and the tech and everything else is following coming up. Anyhow, this week we do have a few earnings coming up, but it's not really any big dogs coming up. We have Activision Blizzard, which is another video game, ATVI. So they will be giving their earnings this week. They make video games like Call of Duty. So if you have kids that play video games like Call of Duty, like that's a big one. This company, Activision Blizzard, is the company responsible for that. Don't know how they'll do it earnings. Again, earnings, if you're playing earnings, those are crapshoots. So you got to be careful if you're playing earnings. We play up into earnings or at the earnings. That's what I encourage you guys to do. But sometimes you can hold through earnings if you can stomach the risk. You can make some nice jackpot plays or, get sent home. So anyway, so Tuesday, Activision Blizzard is the big name that we'll be watching, see how they perform on their earnings. You got Under Armour, which is not really a major thing, but who else we got? Thursday, we got NVIDIA. So NVIDIA, that's a big deal. We talking about computer chip stocks. NVIDIA is a big dog. They make the graphics for a lot of these gaming companies and engines in your phone and stuff like that. It's a lot of software in the phones. NVIDIA, they're big dogs, so definitely keep your eyes on NVIDIA. That's on Thursday. Coca-Cola, you guys know Coca-Cola. If you drink soda, I don't. However, they're going to be reporting on Thursday, and that's going to be a big move for the consumer staples. Pepsi is going to be on Friday. So if you actually look at the charts from Coca-Cola and Pepsi, they actually move together. It's kind of interesting to see how certain stocks, they are in the same industries, they kind of move the same way, they behave very similar. So I can show you guys that. But anyhow, Coca-Cola and Pepsi, their earnings are going to be at the end of the week. Who else? We got Deere that's going to be reporting on Friday. We have energy companies, Duke Energy, and then we have, forgot the other, I remember the ticker is I think it's FR. Anyhow, energy stocks on Thursday. So those are the earnings that we got coming up this week. And let me see what they say. Abel says you can't see the chart. Click meet link. Okay, cool. Yeah, maybe I don't know what you were watching it on. Abel, sorry if you were watching it on your phone or your computer. But yeah, everything should be flowing here. Anyhow, this past week, man, we had a pretty nice setup in Kohl's. We had a pretty nice setup in Kohl's that we did a play. It was a piggyback play off for Amazon. Okay, Amazon again. Last week, GamePlan Sunday, we called out two shorts, which was Amazon and Kohl's, which this ticker is KSS. The reason for the move, I saw some weakness coming in on Amazon on that Friday. After they hit a key level of resistance, we saw some rejection come out there. And it was, some heavy volume flowing into that short. Now, Amazon, they're very volatile, okay? And because of their level of volatility, some people may not be able to stomach the moves in Amazon, which I can show you guys a chart of those here in a few. However, again, I tell you how some of these stocks, they move like with the relatives. It's kind of like Amazon's big dog. He's going to the movies. He's taking his cousins with him. So his cousins come with him when he goes. His cousins go with him when he leaves. Just think about it kind of like that. So in their basket that they lead, you have other stocks that kind of pretty much follow Amazon, but Amazon is the big dog, so they kind of follow the weight. So if Amazon falls, the rest of them coming with them. So Kohl's is one of those piggyback plays off of it, and you guys see that worked out very beautiful here in this play. It was a short squeeze. It was a squeeze that was there. And it's got a first fire off on us here on Friday. So the first shot fired off. Still got some more down play here, but you should be profit taken off of this if you're already in there. Anyhow, so I like that one. And here's Amazon. So again, this is the move I was just describing for you guys. Okay, the rejection off of Amazon, caught a short trigger there, and then we catch the move. Okay. The squeeze is still on, trending downwards. Again, we had triggers to short. We had triggers to short, that's in there. So we still got some more down play in here, okay? And if you actually look at this chart, you can kind of see that formation there. And for you guys that, you got the books that we have, again, this is, double top pattern pretty much. So that's kind of easy. But anyway, I want to talk about Amazon a little bit here because I don't know if you guys caught the news, but basically Amazon CEO Jeff Bezos, he's in a hot seat right now. So Bezos is in a hot seat, and it's very interesting. And Amazon's 10K reports, which they just had their earnings, they have some interesting reports in there where they're talking about the management. They're talking about, and this is not like really normal. So this is not nothing that a company would normally, go in to disclose to the SEC about weaknesses in their management, basically being able to replace key management executives if needed to be. And, there's a lack of skills of people who can actually, basically take the role of running a company like Amazon. That's just kind of interesting. I don't know who write these scripts, but again, when I see stuff like that, I can't ignore it. It makes things very interesting. So because they said that it's interesting, because you take a look at what happened with Tesla. You had Elon Musk who got removed from CEO. He was smoking trees and all that other crap, and they got him removed. And then you have Jeff Bezos, who's actually, I don't know if you guys have been keeping up with it or not, but he's actually going through a divorce, or actually divorced. I don't know if they've gone through it quite yet. I think they're still going through it. Divorcing his wife after like 25 years, long term. Anyway, anytime you're in a position of power, people look at you in a certain way. People expect for you to have a family and things like that, and not to be a dog, not to be a liar or a cheater, that type of stuff. So anyhow, the boy is in a hot seat. Now, his company's already in the hot seat because they done took a whole lot of other businesses out of business. You can't compete with Amazon, right? Amazon come into your sector and take it over. So you got a lot of enemies in the capitalism world already, and they've been trying to push Congress to regulate and break Amazon up into different companies. Okay, Amazon, they, Whole Foods, they selling groceries. They're into medicine now. It started as a book company. They do everything now. Anyway, so he already got a lot of enemies. Then he got this thing where I guess basically cheated on his wife, and they're going through this divorce thing. But if y'all don't know, all your media stuff is paid for. But there's the Washington Post. So the Washington Post is actually owned by Jeff Bezos. So the guy who owns Amazon, he also owns the Washington Post. Some of you guys may share some of their articles on Facebook and things like that. But anyway, same guy, he owns this company, and he don't like Trump. I guess they don't like each other, so he posts a lot of negative things about Trump and stuff like that. But Jeff Bezos is basically, I guess some of the other news companies, they got some dirt on the boy. They got some dirt on, I call him the boy, that's how we talk in the streets, but it's Jeff Bezos I'm talking about. They got some dirt on the man where they basically got some text messages from him and his mistress or something like that. And basically, they're going to blackball him, blackmail him. And it's interesting because I guess, maybe it's some sexting texts or something like that. Anyhow, people do all kinds of stuff on their cell phones, and it's all digitally traceable. It's just weird to me. Anyway, so now he's in the hot seat, and he's scared, don't know what they're going to release. And he's basically came out and said that something about, it's a political, he said it's like a political game against him right now. I feel like, they're trying to attack him on some political stuff. I guess that's his attack from conservatives or right wingers. Now got some dirt on him. And once they release that, if they released it, which I'm sure they probably will, people are going to look at him sideways. That's going to impact Amazon because he is Amazon. It's kind of like I'm Wall Street Jack Boy. Something happened to me, people are going to be looking at Wall Street Jack Boys all sideways. You know what I mean? So when you're in that position of power, you gotta keep it together, and so he dropped the ball, with this particular scenario. So you see in this big red candlestick here, you see this rejection after their earnings. I mean, that's the money's business plan is good, right? I mean, as far as, the company is good, but your boss, your leader, he messing up. You see what I'm saying? It's cheaper to keep her. He should stay with his wife. Anyway, it is what it is because somebody got to pay. And that's what we're seeing here. So anyway, it's an interesting development here. So Amazon is still in sight for the short side. On a technical aspect, we got, all the evidence that we need for technical assessment, and then you get the news later. So you got the rejection point up here. We were already in it last week. And then we got the news here. You know what I'm saying? The news come out. You're like, oh, okay, that's kind of weird that the company is talking about in the 10K filings about how they probably can't replace their senior management. They didn't specifically say his name, but you guys use context clues. They teach you that in elementary school, right? It's like, that's interesting because you don't see that in other people's 10K filings. This was all money. So why are we talking about replacing your management? Anyway, that's an interesting development. So keep your eyes on that. If y'all find out something, let me know. Juicy stuff, man. I'm telling you that this needs to be a TV show. Real life should be a TV show. Maybe Netflix can host it. Anyhow, so looking at that now, that's the juicy stuff. I thought you guys may find it entertaining. Let's get to the nerd stuff. All right. So now we're looking at the S&P 500. Okay. Break it down a little bit. All right, cool. Yeah, I guess I drew some lines here, doing some measurements. But let's see what we got here. This is where we are. All right, cool. So here we go. The 200 moving average, this yellow line, key level of resistance. This is a very strong line of resistance, okay? So we know that. And this rally up from the December lows pierced through all the other resistance levels, 50, the 100. And now we pushed through that one last week, which is this blue line here. So the whole test was this. Actually, let me show you guys. So what we wanted to see, because we already cleared all of this, okay? So as we go through the weeks, we say, hey, we can identify these invisible lines of support and resistance. You guys can't see it unless you got the indicators that we have, right? So we saw it come up against here. Then it pops, it tests that 100 moving average. It gets rejected and falls to the 50 as a floor. It makes another attempt. It doesn't clear. It comes back to the floor. It makes another attempt. We see that it stalled. Okay. Then we got the push through. This was last week. Excuse me, the week before, right? So we had to push through, and the push through came here to the 200 moving average. Okay. That's key level. And then with the rejection, this was last week. Okay. All right. So this is where we are. If you guys recall from all the past Game Plan Sundays, this little dotted line here, this dotted yellow line, it converts to this pink line. This is a line that I drew a while back because this line was very significant because it let us know when we began 2018. So say if you jumped in 2018 in the stock market world, you bought you some stocks here, you made some money, for the most part of the year until after October. And if you held, you were not trading, then you started losing money. Okay, so that line was very significant. So I keep it here on the board as a reminder. And it just so happened to coincide with the Fibonacci lines as well. So it's the same line here. Interesting. That's why you convert to the yellow. So after December lows, we got this rally up, and we got this pierce above that. This is interesting. And we get this rejection. Now we're back to that line. So we're reverting to the mean here. And we see the same pattern throughout the rest of the markets, basically. It doesn't really matter where it's at. It was the Dow, the Russell, the NASDAQ, or whatever. And pretty much all rejected. Not pretty much at the 200, they're actually lower. And but because we see this rejection here, I am more poised to look in for some things to the short side. I don't really want to be aggressively short because, again, we see, it's temporarily, shorts in here, and then they come through with the long side. But anyhow, um, if you guys see this move like this, it's very similar to this move like this. It's like a pretty cool pattern if you just take this and flip it back around that way. Kind of like it just feel this objection. Anyway, I just thought that's interesting stuff. When you kind of start to see this stuff over time, you can kind of quickly just identify stuff. You know, you're like, oh, that's a double top. I can just easily see that, right? You guys got the printouts and everything, so you can identify these certain patterns. So with the S&P 500 looking short, I wanted to look at how to play this thing. So if we're looking short, then what I'm going to do to solidify this move is I actually want to take a look into the bonds. Okay, because excuse me. Yeah, so if equities are long, if equities are short, then bonds are long. They play counter. Equities go up, bonds go down. Equities go down, bonds go up. And so it's an interesting chart here, very beautiful chart. Easy to just understand what you got going on here. Y'all see we had the squeeze and we have a fire long. These two dots here means the fire long. We got some upward momentum here. Now again, got some resistance up ahead. There was a test, came back to the mean, another test, pushing up against there. What I want to see here is for this to breach through this resistance here. So that's what I'm actually looking at. If I'm gonna play equity short, looking at the bonds, this is a confirmation signal here for me. This is a confirmation play here. I got a bull squeeze on bonds. That means bonds going up. And this is the 10-year. This squeeze is actually fired off 2 days. If you actually look at the 30-year, and we look at the 30-year, squeeze is still on. It hasn't been fired yet. See? It hasn't fired yet. When it does fire, we expect it to move up. All right. So, because that's what we see from a technical point of view, you can actually play bonds long. Here you go here with the TLT. And the squeeze, it's a fresh fire. I guess the fresh fire from Friday. As we see it pierce through our 618. We definitely want to see it push through. But you know, we can see this thing fire up to about 125. You know. Now, do I necessarily want to see it fire up there? You know, not necessarily something I want to see, because that means that the market is going to be going down. But according to the technical data that we have, and that's the way I have to look at it, unless we see other developments, you know, that may change the course of this. So anyhow, TLT long, this is something that would like to play this coming week. Okay. All right. So bonds long. Now, interesting. We had a setup that reversed on this last, and biotech. So biotech stocks, IBB. This is the sector for it. A lot of lines here. I'm gonna clear some of these things off for you guys. All right, so doing here was a setup that we were looking for the bullish side. Once he got rejected, we had to reverse it to the bearish side. It was a squeeze, and this is a squeeze play. We had some upward momentum, but we knew that we were pushing up against, you know, this resistance level. Now, what you wanted to see it do is to clear resistance. We saw it had a nice little pop, a pop above, but it didn't clear. So a pop above is not clearing. Okay, it's a test. So it popped above, but it never cleared. And normally when you have some upward momentum, we have some buy triggers in there, Had a little squeeze popping off in there. A squeeze gives it enough power to be able to push through, strong levels of resistance. And so, because we know it's a 200 moving average, you really want to wait to get that signal. You really want to wait for it to push through. Okay. If it was a weaker line, you don't worry as much, but because it's 200, you have to wait. So, hopefully you didn't get in too early. You waited till your signals, wait, let me see if I can go on the intraday here. Have it on the intraday chart as well. And so it's a tricky one here. But we do have, you do have downward trends. You still have the squeeze intact. And then you have a sell trigger there that says to sell. So yeah, again, this one here, changed my direction on this one to short. See how it plays out. I don't like trading biotech stocks. Okay, biotech stocks are really, really tricky. Okay, really, really tricky. They are very, very volatile. They can really tear some ish up. And I think in this one in particular, what actually brought it down was, so within this sector here, you had this stock that actually brought it down. You see all that ripping down here? Okay. So that's what brought that whole plate down. It's a short squeeze fires. You see that squeeze? It fired short. And so it's on its way down some more. So more downward pressure in there. I expect to see some more short side to IBB. What else? Now, so if bonds, from long bonds, which we just covered, then that would make me short financials. Financials have been very, very tricky for me this year. Very, very tricky. They can mess up on earnings and still rally. Anyhow, financials going to be very sketchy. I know Wesley, I don't think he's here, but Wesley can tell you guys, financials have been very tricky. So, however, I'm still short financials because I'm long bonds right now. And as we see, it came up against this 100 moving average. It hit my 786 on the Fibonacci, and then it's coming back down beneath the 100 moving average. Okay, now it's testing the floor of 618. What I want to see is if it breaks under the 618. If it breaks under the 618, then you're on your trip down. Okay. All right. So that's to the short side. I don't want to be a bunch of doom and gloom here for you guys. So let's see if I can find something long to the upside. WWE. This is an interesting one, okay? I grew up watching wrestling. I don't know if you guys watch wrestling, but you had Stone Cold Steve Austin, Rock. I mean, I don't know what's going on in the world of wrestling these days, but those guys were the ish, okay? We used to watch that like it was religious. So we watched WWE often. My mother is a huge fan of WWE. She loves Stone Cold and The Rock, so we used to watch that all the time. I don't know what's going on with them these days, but I do see them in the market. So when we see them in the market, let's see, they had earnings, and they actually blew the earnings out the water here pretty good. It's about 3.32. They hit 0.44, so they had a nice earnings. It looks like the investors sold off into earnings, and they came up and sold off into earnings, and this, they shook out all the weak money. Bow, popped up to our Fibonacci extension here. That's interesting is that we have a squeeze, and then we have trajectory moving upwards. We do have buy trigger here, and so I like WWE to the long side. Up ahead, I got a $90 target here. Around 93, you can just round this off the 95. Market likes whole numbers, and then about $100 there if it continues to go up. So I believe WWE is poised to try to make a move to $100 up ahead. So anyhow, don't know what's going on in the world of wrestling, but if you guys know something that I don't know, make sure you let me know. Keep us informed. Yeah, so interesting stuff. So, I like WWE to the long side. For the sectors, utilities actually move weight. They've been moving weight sectors last week. So we had utilities actually outperform everybody else this past week. So we had utilities, we had technology sector, we had the industrials that basically were the top three that's moving. And here in utilities, you see we had this line here. You see the stocks kept on coming up and testing this point, not really clearing. And so we wanted to see how it's going to behave. We had the lines already there, which you need to see how it's going to behave. And then we got to pop through. And then we have a whole candlestick that clears the line of resistance. So when it clears that line of resistance, this line is now a floor. Okay, so if it makes any fallbacks, it'll fall back to this line, but this line would be the floor for the next leg up. Okay, so the next leg up. So, but this is a bullish sector. Sector is bullish. So overall, the basket is bullish. We see the bullish basket. We see the individual stocks and within the basket, move up with it. And then another thing is that we've also played utilities as a defense mechanism. Basically, the markets go down, equities go down, utilities go up. Same way we played gold the week before. Gold was popping. Utilities, bonds, right? So when they go up, stock market goes down. So it's kind of like you could play those long as a counter to the market, right? So because of that, I did see some setups in what is it called? Here we go. So there is a bullish setup here, and NRG Energy. Don't know which company this is, but it's an energy company, utilities, and we got some upwards trajectory here. We have a bullish squeeze. We do have buy triggers. Okay, and these stocks really don't move much. They really don't move much, but they don't have to move much for you to make money. We just need for it to move $1 or $2. Okay, with the options. Cool. If we go to the options chain, let me see. All right, so just 3 days, 33 days out, market makers already have a $3 move priced in, right? So we got a $3 move priced in. That's about $45. You add that all together, 41.83, 325. I don't know the math there. It should be somewhere close to 44 some change or 45. Market makers already got it priced in, so we already see, it's to the upside. All right, and so. Again, that's not much movement in 33 days for that. If we're looking at the next 5 days, it's only a $1 move. But say if you take a look at the calls here, if you take a look at the Delta 70 calls, it's only 255. So that's a pretty cheap call. Okay, $255 for the 40 strike. Okay, and if it moves 1 point, then that turns into 360, right? So if you bought it there, you can turn around and sell it at 360. That's good money. Okay, that's good money. So anyhow, you don't need for these to really move much when you're playing options, because the options is going to make it's exponential profits on this one in comparison to playing the stocks. So this is a bullish setup in utility. So again, we're looking at the basket. I showed you the strength in the basket, which is utilities. I'm showing you individual strength within that thing that should help it, push through. This is one of those names that we're looking at this week. Another is this one, First Energy. Excuse me. So this is another one, First Energy. We got another setup here in First Energy. It looked like it's a while since I did anything. Charts. All right. So we do have some support there. to the upside. Okay, so these are the short stops up ahead. Not much movement, not expecting much movement. Expecting to go to 40, maybe 41. But you may see some bumps in the road when it gets to these targets here. So again, you got the bullish squeeze, upwards momentum, buy triggers. They just did a dividend payout. Cool. So I guess that's how I wrap it up for this week coming up. Again, we got some framework of what's happening this week. Keep our eyes on that, on those developments as things change. You know, you have to, adjust certain things. If you're wrong, you're wrong. You need to know when you're wrong. When your levels break, then you're wrong. And so, yeah, I'll take something from you guys here. I'll take a look at a couple of them from you guys. I know my man Bridgie, Doc definitely wants to look at TWLO. So Twilio is a very interesting stock here. They are bullish. So this is a very bullish stock. This is a very bullish stock. We do have earnings coming up ahead. When is the earnings? On 12th. So earnings on this one is in 2 days. That's the interesting thing, is that this stock may play bullish up into earnings, but you have to get in on it if you're not already in on it tomorrow, right? So that you can make your move before earnings occur, because you really don't want to be holding this thing through earnings. Ain't no telling what's going to happen, okay? If you plan on playing this thing into earnings, you need to be out of it before you get the reports. We do have, so for one, this is a bullish stock, but it's extended, okay? You see all my levels down here? It's just showing that extended. It's above those limits. Is this something I ideally want to get in? No. I would rather have got into this one way back here. Roll it up to the first extension, right? Take profits out here. Let it come back to the mean. Once it get popped through here, then, would have rolled it kind of through here again. So it's right here again in this extended zone. Again, I see this extended zone, and I got this extended zone. So it's not an ideal play that I want to play. You can make money off of it, definitely, but understand that it's a higher risk when you plan them up at these extensions versus you plan them down here. Then to the bottom side, you don't have much to worry about. If your risk is lower, your reward, right? Your reward is greater. So, that's the way I look at it. So when I'm up here at this extension, I'm like, well, my reward is here. And the stock is here, so I can only expect, I don't have any levels above this. Okay, so this is all the levels that I can pull from this chart here. The risk to the downside, again, once it comes through the Fibonacci's, then it's going to the moving averages, right? And so this is the risk is greater than the reward. So for me, I would like to pass this one. But just understand, if you are going to play it, you can definitely, make some money. But just know that you're taking on more risk when it's extended like that. You know what I mean? So yeah, but it's a bullish stock. So let me know how you do on that, Bridgie. It's an interesting one there. I do hope that you're planning into earnings and not planning on holding it through earnings. Abel wants to know about JP Morgan. I don't know. Have you heard what I've been saying this whole time about bonds? This week I'm actually looking long for bonds, and so if I'm long bonds, then that means I'm stocks. I'm short stocks, financials, banks, bonds. They play counter. So because I'm looking long that way, short for financials. JP Morgan, again, this is one of the financial stocks, and as you see, has performed up against the 618. No clearance here. Even the 100, stacked on top of each other. No clearance there. It's testing, rejected. And now we see the 9 moving average. Yeah, moving average is actually starting to cross over. So when you see that crossover, that's your trigger to short on this one here. So potential to the downside is, again, I would like to look at this short. There is a squeeze here. We do have some downward trajectory here, the downward momentum. So my views on JP Morgan is short. Yeah, I mean, on the intraday chart, you see on how well it behaved up against the 618. I mean, ideally, you like charts that you like. Not every stock behaves, super tame towards the levels, but when we do get stocks that behave according to our assessments, I mean, that's great, because you can predict those better. You know what I mean? If you saw when it came up, oh crap, let me go back. Yeah, so as you see how it behaved every time it got to the 618, reject, 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 and then it says sell, right? That's that trigger. So it was like, hey, to the downside. And once you caught the crossover, then you just ride it all the way down. Okay, so tomorrow or what have you, I don't know what tomorrow's going to bring, but you may see this come up to this to the 9 moving average, and this is my intraday chart. So you see it come up here, just see how it's going to behave, because it can pull all the way back up here, and you don't want to get in at the wrong spot. Make sure you time it on like the 5-minute chart or 15-minute or so on your intraday charts. See how it behaves up against these levels here. If you start to see that it gets shaky, then you want to wait for the trigger. Then you enter for more to the short side. Okay, so we can already see that this is the floor level here. So if you're looking for shorting, just make sure you time it. If you have the time to time it. Okay, but yeah, I definitely like this to the short side. What stock is that? JP Morgan. You guys have anything else you wanted to look at? Any other stock, any other questions you guys have? How would you short it? What do you mean, how do you short it? You don't know how to buy a put. You don't know how to sell a call credit spread. That's how you short it. Either way, buddy, you should know this already. You can sell a spread, right? Or you can buy puts, right? If you're looking at this, we do have low volatility on it, right? So when volatility is low, do you want to take a buy strategy, or you want to take a sell strategy? When volatility is low, do you want to be a buyer, or you want to be a seller? Well, you want to be a buyer when the volatility is low. Again, it's all kind of strategies that you can use, options. But the way that I teach you is very specific and simple. I don't teach you a million strategies, because you don't need to know a million strategies. I want you to get lost in the sauce. Just keep it simple. Master what you've been taught before you move to the next lessons. Okay. So when volatility is low, you want to be a buyer. Okay. Bingo. Simple as that. So you take a buy strategy. So you say, hey, I'm short. If I'm going to be a buyer, what am I going to buy? I'm going to buy a put. Simple as that. That's right. Thanks, Bridgie. Yeah. Okay, cool. Anybody else got anything else that you want to take a look at? Or any other questions that you guys have? The stock market has been crazy, just like the weather. I don't know if the weather's been crazy where you guys been, but one day is super cold, next day super hot. It's crazy down here, man. But the market is kind of the same way with volatility, so it's interesting to see how these things all behave together. You guys, make sure y'all cop the gear too, man. Y'all get the merch. Y'all representing. You know what I'm saying? Make sure you get some merch. Get your hoodies, you know what I mean? Get your shirts, your t-shirts and everything. Represent, man. Make some posts. Post them on Instagram or something. Tag me in them. If you know somebody who could benefit from, what we do, or is interested in the stock market, make sure to refer them over, to the website, to the newsletter. Make sure they, subscribe. Get all the free goodies that we give. If they want to know the training, then they can get the training. It's no problem. And make sure that you execute your trades properly too. We did have a little fiasco here this week And it happens. So I guess I'll tell you guys about it too. Basically, just make sure that you execute your trades properly. You know, if you don't have your, see, one of the things when I started, what's up, Jill? How you doing? One of the things when I started trading is I kept my cheat sheets on my desk, like a printout, and I kept them on my desk so that I can actually reference those things. So when I'm executing, I think sometimes I had some complexities with trying to figure out how to execute those trades. And with trading options, it can be complicated, right? So just make sure if you have the books. I spent a lot of time putting together those books for you guys. And they're very visual, and they will help you to know which strategies to use and what type of environments, how to use them, how it's actually supposed to actually look when you actually are executing a trade. So, make sure you take advantage of that. It does happen to the best when sometimes you're just on the go, you're busy, and then you're meaning to short a stock, but you end up, buying a call and you meant to buy a put, right? And it happens. So it happens to me sometimes. It's bad if you actually lose money. It's like, I was right in my direction, but I was wrong in my execution. I executed the wrong trade. That's normal. It happens to everybody. It happens to me before as well. Sometimes you're busy and you just like, I'm trying to help and put a trade on or whatever, and then you forget. But just as a checker, just make sure that, keep those sheets over there, till you're able to get it. The guys are there to help you. I will tell you that it's funny that if you're wrong and your trade, you put on the wrong trade, but you were actually wrong on a direction, and that trade make you money. That's the opposite feeling. So that can happen too. You put on the wrong trade, but you end up making money. Those are interesting days. You're like, oh, I was wrong on direction, but hey, I'm making money. So cool, right? But on the downside, it's like I was wrong. I messed up. And I think that you can forgive yourself for that. So don't beat yourself up if that's something that happens. It happens to the best. Okay, but that's why we keep the guides handy. Did you guys actually get the books? I mean, I sent out the emails. Again, this is for all the premium members. All premium members get all of these things. So if you haven't gotten those things, make sure you send me an email, send me a message so I can make sure that you get them. Okay. All right. Anything else that you guys want to know or hear from me? I did just come from a trading summit over the weekend. It was pretty interesting. Nothing new. It's just a good networking experience. And so that was cool. All right. So you guys are a little quiet tonight. Well, cool. So I guess see how the markets shake out. You guys got a good game plan strategy here going into the week. And I hope this is a blessing for you guys. And we'll catch you throughout the week. I'll bring the session to an end. Y'all have a good night. Peace.